Well, good afternoon, everyone, and welcome to what is the second webinar that Nebraska Farm Bureau has put together in our Inside Profitability series, kind of a new series of webinars and podcasts and social media events that we really are trying to focus in on, as always, some policy stuff, but still trying to focus a little bit more in on farm and ranch profitability. I'm Jordan Dux. For those of you who don't know, Jordan Dux, I'm the Director of National Affairs for Nebraska Farm Bureau, and I'm going to host the event today in coordination with Jay Ferris. We'll try to do this as a tag team here as I'm in Washington trying to do some work, and I have to catch an airplane at some point. So our Inside Profitability series is a series of webinars and other events that really try to focus in on some essential topics that would try to help producers become more profitable. The topics are identified by our members as ones that are important to manage and maintain economically viable farm and ranches. We are hopeful that you get some things out of this. You find this series informative, and we're certainly really excited to have our panelists that we have on today focused in on the webinar, are focused in on climate markets and this sustainability markets, carbon markets, however you want to look at it in this space. Certainly some significant conversations that are taking place in DC, in state governments, in the private sector, really looking at the creation of these, and they are created, sustainability, climate, carbon markets. And Farm Bureau in and of itself has been extremely active trying to get answers, try to provide as much information to farmers and ranchers as we possibly can. Today, we've got three folks who really are going to share with us their expertise in this area. First and foremost, we have Shelby Myers, who's an economist with the American Farm Bureau. Shelby has other issues in her portfolio, but certainly she is a highly sought after. I'm going to call you an expert today, Shelby, on this topic and really the idea of the creation of these markets and what that works. Shelby is a Purdue University alum and an Indiana native. We also have Nathan Thompson, an agricultural economics professor at Purdue University. We're heavy on Purdue folks today, and we'll have to see. We'll be friendly today, and we'll see what happens on August or October 30th. I think is when we play Purdue. But we just appreciate Nathan joining us. He started at Purdue in February of 2016 after completing his PhD in ag economics from Oklahoma State University. We also have, and we always want to try to provide a producer perspective as well. And we're excited to have Lucas Fricke joining us. Lucas is a farmer and hog producer in Butler County, a 6th-generation pork producer, and a graduate of the University of Nebraska. We had to have at least one UNL person on here as well. So after the presentation, we're going to open up for presentations. We'll open it up to questions after the presentations are done. And if you have a question at any time, feel free to type it in the chat function or the Q&A function, Mark. For those on Facebook, same thing. If you've got a question, feel free to type that in, and we'll try to get your question answered here as well. For those of you joining us on Zoom, we certainly can unmute you as well when we get to that point. But just appreciate the opportunity to present this with you. And so with that, Shelby, I'm going to turn it over to you.
Well, great. Thank you all for having me. Excited to be here. My light is just going all over the place, so I apologize if that is distracting. It's kind of distracting me, but excited to be here. Thank you for having me. This is something that, we've been on the road a lot to talk about, and I'm going to pull up my slides as I chat with y'all. We've been on the road a lot to talk about this topic, and I think it's something that our members are obviously very interested in, but it's also kind of the hot topic in the room to talk about. And so I'm going to kind of lay out the foundation for what's going on in these credit markets, what's happening, some of the landscape and the players, and just kind of what growers are saying, because right now, one of the roles that I have for American Farm Bureau is to represent the grower voice on as many platforms as possible as these are developing. And one of those areas, this is just one of the many innovative finance opportunities available to help enable conservation adoption. And so it's the hot shiny thing in the room, but please know it's not the only option. If there's some things that are said here that kind of turn you away from it, but there's also a lot of opportunity if this works for you. A little bit about me. So Jordan mentioned that I'm a Boilermaker. I'm a very proud Boilermaker. Also grew up in Indiana. My family, my husband's family farms just south of Purdue, and we grow corn, soybeans, cattle, and custom sweet corn for a local distillery. And we're not heavy in conservation. And so I think that helps add to this story a little bit too, is that anytime that something's proposed, I always think about it in terms of how would this work on our farm, or what's the on-farm practicality of what's being asked of farmers here. And then I also spent 4 years at Indiana Farm Bureau prior to coming to American Farm Bureau. And so I kind of bring that state Farm Bureau hat and understand the Farm Bureau family and what you all need from our policy process and how we execute it going forward. So with that, I'm going to jump into this. I always start with a disclaimer, if you will. I feel like with Zoom, I'm not a lawyer, but Zoom has made me a lawyer on TV. I will start with a disclaimer that a lot of the information that I'll share with you today, it might change next week, tomorrow. It could change within the next couple of hours. This stuff is moving so rapidly, and the entire market landscape for carbon credits is moving rapidly. And so please be okay if we answer a question with, I don't know, or it depends, or I can't tell you because it's proprietary. A lot of times that's been an issue as well. So we'll get started. For background, these are I mentioned these are voluntary incentive-based options. This is just one of the many, but it's a national market designed to bring buyers and sellers of agriculture ecosystem asset credits together. And I'm going to call them those. And we're not just going to talk about carbon, but I'll get to why I'm talking about that in particular. It's bringing those buyers and sellers together on one platform for the exchange. Farmers who want to earn money selling these credits opt into some version of data monitoring and measurement. And that's something that you all as farmers need to be aware of, because understanding that you will be opening your books up to another business partner is an important element to understand. And there's a data collection burden that you need to be okay with, and there's a resource burden that you need to be okay with, and then the data sharing in general is something that's really important to point out. Payments are typically based in two ways. You'll either see a pay for practice model, where they're typically paying on a per acre basis for you to adopt a specific practice. We know of at least one market like that. There's also a payment based on outcomes, and that usually comes in the form of either a price per metric ton or a price per credit. Now, the conversion rate of metric tons of, say, carbon sequestered per credit is variable based on the market. It's variable based on the partner that you pick with. So I can't tell you exactly, if you were to sequester X amount of metric tons, it'll mean Y many credits. We don't have that exact conversion rate, but just understanding how those will be paid will be important as we talk about the markets. And then there's three magic words that make all of this flow together. It's certify, quantify, and verify. All the practices that you pick have to be certified. It's typically an NRCS practice, but they've got to certify that the practice that you're doing is agronomically correct for what you're trying to accomplish, and it goes through the protocols that they need it to on their systems. And then they've got to do all the research to quantify the results that are being implemented. That typically comes in soil samples and understanding the chemistry of the organic matter on your soils. And then all of that has to go off to be verified by third-party verifiers. Those are different organizations that have been created to kind of bring some standardization to this market. There's no number 2 yellow carbon. So what the verification does is kind of brings that together and brings those standards together and gives the credibility behind that credit, so that when buyers come in and say, I need the credit to fulfill this purpose on my green balance sheets, which is what essentially how they're getting to their net zero commitments, that credit does what it needs to do. So keep all that in mind as we move forward. None of these practices are new or different to what we're talking about. Many of our producers have been doing this for years. Many of you know about the benefits these have. A lot of times it's just the financial hiccups in adopting them that keep us from doing it. So we've got conservation cover crops, crop rotation, livestock rotation. If you plant a cover crop, let your cows graze through the winter, and then plant on top of that. No-till, strip-till, for a lot of dairy farmers in the room, anaerobic digesters, nutrient management, buffer strips, tree establishments. I get this question a lot too. doesn't matter how the practice is implemented. Do we need direct seeding versus overseeding, cover crops, what width of strip till, all of that. They're less picky about telling you how to do the practice. And frankly, as American Farm Bureau, our policy would support us being able to farm the way we need to farm, that's supportive of what we need it to do. A lot of times it's just getting the practice accomplished. If I threw a lot at you really quick and you're like, oh, I am overwhelmed by what we just talked about, I did make a flow chart to try to help piece together some of this information. On the left here, you'll see the producer enrollment. You've picked that NRCS practice. You've been okay with adopting that data monitoring and measurement and said, okay, we're going to do this. You're going to sign a long-term contract. And this is really important to understand because all of these benefits take time, and it's in order to quantify the credits that are being generated, it's got to be over a long period of time. And so you're going to sign a contract, whether you're a tenant or a landlord, you both have to sign it. If you're a tenant and you lease land that's in a trust, you've got to get everybody in the trust to sign off as well. I liken this, I was not ironically, but to me it felt ironic. Politico quoted one of my comparisons to this long-term contract. It is really fitting. It's kind of like marriage. And you're going to sign a long-term contract, so you better know who you're going to sign the dotted line with and be okay that you're in business with them for at least 10 years. The shortest contract I've seen is 2 years. It's been for a pilot project. Anything beyond that, I've seen 5, 10 years. I've seen 30 years. And then a lot of them have a 100-year permanence clause established in them as well, that essentially is holding you to saying, if you've committed to, for example, no-till for 10 years, the second that 10-year contract ends, you're not going to run a cultivator through the field. That's what they're trying to establish there. But that long-term contract, I can't stress it enough, know that you're going to be signing a long-term one. So we've decided to opt into all of that. Then you're going to start quantifying, generating and quantifying the assets that you've agreed to. Some markets have the ability to stack assets. Some of them are trying to develop further, but I mentioned carbon is probably the most popular, and we'll get into why in a second. Then those goes off, they're verified, they come back to the market, and then our credit buyers who are looking to meet sustainability commitments, either they've said we want to be net zero by 2050, that's got to be proven on a sustainability green balance sheet that they're going to submit to a global audit reviewer, or they're trying to meet compliance standards that they have for either the countries that they're in or even the US. And then growers will be paid for the credits that are generated. So carbon is the most common greenhouse gas, and it's the most common market platform that you'll see. The reason that is because majority of the other economic sectors are heavy carbon emitters, and they're focused on reducing carbon emissions because that's where they have the largest greenhouse gas problem. We in agriculture are heavy greenhouse sequesterers, or heavy carbon sequesterers. We have the ability to pull carbon out of the air and into the soil through our plants. The way that we increase the change in normal practice is by adding some of those practices that we talked about and increasing the amount of carbon that's sequestered. In agriculture, we're not as heavy carbon emitters, we're heavy nitrous oxide and methane emitters. And so keep that in mind too, as we're talking about other options available to generate credits. If we can do water quality, nutrient management, other greenhouse gases like methane capture, and generate asset credits that can be paid for. That's also an opportunity here in some of these markets. Credits are being purchased by corporations, agribusinesses, and other local governments. And then the credits can be paid for in terms of input discounts, depending on who you're working with, or in a cash payment. This is a slide that gets a lot of attention. We're trying to get a better understanding and a broader scope of who the players are in this landscape. So we do have the public piece of it, a lot of the what Congress is up to in terms of climate legislation. Obviously, the Growing Climate Solutions Act is a bill that American Farm Bureau has been supportive of. I call that, full pun intended, the buffer bill. What that does is it puts up a lot of barriers around how or not barriers, but bumpers around how this landscape will develop, and puts USDA at the center of it, trying to develop a certification program so that we can streamline some of the other barriers of entry that farmers and ranchers have been experiencing when trying to participate in these markets. It also puts a farmer advisory group at USDA to help USDA manage the development of this and get proper feedback from growers on what they need from this private landscape. There's also talk about USDA Commodity Credit Corporation serving as a carbon bank. When this idea was first proposed, a lot of people thought USDA was going to be a carbon market. And they've kind of walked back from that idea, I think, realizing the amount of money, staff, resources, time, research behind what it takes to operate a market. That's really evolved into more of a cost share and pilot project enabling resource there. So we'll see how those two evolve and what Congress does in that landscape. The rest of these, the programs on the left and the market operators / providers on the right, those are separated for specific reasons. The programs on the left are typically partnered up with the provider on the right. The provider can either be the verifier, they're the platform that's creating the exchange, they've got protocols or certain data products that help make the burden of enrolling in the program easier. So Nutrien is partnered up with ESMC and Nori. Corteva just announced that they're partnered up with Indigo as well as ESMC. Land O'Lakes has a direct buyer from Microsoft. Growmark just partnered up with Indigo. And so you see a lot of these programs over here. They've got boots on the ground. They've got a lot of what I would use the term as enrollment folks or technical assistance providers that are going to help you as farmers get enrolled into a market. And then the market operators on the right are kind of making everything work and trying to get that standardization to be successful. Bayer is kind of on their own. I will say I mentioned they're the only pay for practice model. They're doing $3 an acre for no-till, strip-till, $6 an acre for cover crops, $9 an acre for both. Bayer and Land O'Lakes are the only two that have look-back clauses of at least 5 years. So if you have data from 5 years back, they may be able to take that and generate it into compensating you for a little bit. But otherwise, if you've been doing this for a long time, if you're an early adopter, they may not have a solution for you in these markets. And we'll talk about that here in a little bit. This chart is merely for symbolic purposes. It was published at the end of December in 2020. By April of this year, just 4 months later, it was already outdated. That's how quickly this entire landscape is moving and how quickly this industry is evolving. This is just trying to put some context to where all these folks are operating and where they might have pilot projects, where they're trying to enroll some farmers. As much as we can, we're trying to stay on top of what projects are out there and who's working where. They're not as public for farmer privacy reasons, but at least they're naming states and trying to get involved in some of the local areas. I know local state farm bureaus have been trying to help us keep notified too of where projects are happening. I've mentioned pilot projects a lot, and that's kind of the status of where we're at. If you look at a market growth curve, we're still in the lower concave, seeing how this is going to develop. There's no real rush to run to the market, or they're still trying to develop the processes to quantify and verify these assets that are being generated, trying to develop protocols to ease that burden of enrollment, and then testing and refining those tools and protocols available so that you as farmers don't have to burden so much of the work. I get this question a lot. Why are we even having this conversation? What's the purpose of all of this? So obviously the conservation piece of it is the purpose of it, promoting healthy soils, maintaining ecosystem functions. There's the efforts to reduce new emissions and remove past emissions and the climate talk. But for everybody on the call that's involved in agriculture, this has the potential to be a diversified revenue stream if it works for you on your farm. For folks that are interested in adopting conservation, this can help reduce some of those financial barriers that maybe you've struggled with for a couple of years. Most of the time, though, I get a lot of questions from growers, and for the market space in particular, it's the barriers of entry that we've got to overcome. There is that verification piece that I mentioned, and verification costs money. So the question of who burdens the cost of verification has not been solved. And there's a lot of folks looking to USDA to maybe play that role. Do farmers pick up the tab? Does the market platform pick up the tab? Or do the buyers who need it pick up the tab and maybe possibly pass that cost on to consumers? It's very unclear how much of that cost has to be burdened by one entity or multiple entities. And so that's one of the barriers to entry there. We also have barriers of early adopters and additionality. Right now, these markets are solely built on the purpose of a change in practice, a change from what normally would be occurring otherwise. So in order for early adopters to qualify for a market, you've got to change one of your practices. So if you're already doing no-till, you'll likely have to adopt cover crops in order to create a change in practice, because essentially we're establishing a baseline in year 0. And by year 10, we've got to quantify the change that's occurred. If you're already up here and you don't make any changes, the amount that we can quantify is very little. But if you've never done conservation before, you make a change, we suddenly bring your baseline from here all the way up to here and have a large delta to quantify. And so that's certainly a barrier that's existing, and something that I've heard from growers a lot, that we've got to find a way to bring early adopters into this conversation or compensate them in another way, because they'll be excluded from the market. Financial barriers are obviously part of this. This wouldn't be a solution if financial barriers didn't exist, but there are other ones to think about too. Think logistic barriers. On our farm, it's very difficult if you've got a 3-day window to convince my father-in-law to get out of the combine and run a cover crop just to make all this happen. We're a one-man operation. It's not going to work. You also have to think about rising land prices and rising input costs. The cost of cover seed could likely increase this year due to the incentive to grow corn, soybeans, and wheat in the West, and drought could impact that as well. And so as other costs increase, we could see more financial barriers come out of this that the market hasn't been prepared for yet. Technical support on here is another one that's very important to bring up. It's laughable to think that we can do any of these markets without sufficient broadband. All of our enrollment is online. All of the data products needed to make this successful are online. Enrollment forms, platforms, all of it online. And right now, rural broadband is not sufficient enough to handle all of what would logistically be needed to operate these markets. And so broadband's got to be part of this conversation. Education, anybody who's done anything new will tell you there is some trial and error, especially when it comes to conservation. And I think you'll hear a little bit about that as Lucas gives his remarks, but definitely something that's got to be taken into consideration. And then the rest of the questions on here are just things that I hear regularly. How will farmers be paid? That is a really big question that's lingering, because right now it's dictated. Some have dictated prices in their contracts. Some have left it open-ended to see how the market grows. It's unclear what the demand is and what the willingness to pay from those demand buyers truly is. And so a lot of questions linger out there. The new product by the CME group for nature-based credits might help bring some transparency to that, but it's a little too early to see how that'll evolve. There's questions about farmer data and how it'll be protected, and what you're sharing, what the agreement that you've signed said, how much you've exposed your operation to data sharing, that sort of thing. With new markets comes new regulation, and I think that's been another question that's really stuck out there, is who's going to regulate a market like this and kind of protect and enable farmers who are participants and essentially have the only supply available right now to make sure that their interests are protected. Contract terms have been all over the place, and they're not written for farmers. They're not written for lawyers that work with farmers. So it's really important that if you do get a contract, to review it thoroughly. And like I said earlier, you're essentially going to marry this contract. So make sure you choose wisely and make sure you can trust them. Liability and access will be part of that too, and making sure that you have notice on before someone steps into your fields and starts running 30 different soil samples and gathering the information that they need for your enrollment. And then finally, what's realistic to expect? I think that's a fair question to ask. It's very early right now. And so expectations are all over the board and rumors are kind of flying all over. And so it's okay to walk it slow and see what's going to happen, because we're not really sure what's realistic yet. And working on your behalf to get a better idea of that is something that we're trying to get a better sense of. And so you've got to find who you can trust, and don't be afraid to ask them questions. And that's kind of what that last bullet entails, is what about X, Y, and Z? There's a whole lot of questions still to be asked and still to be answered. And we don't even have them all. So feel free to send them our way and send them to Jordan and the rest of the team at Nebraska Farm Bureau. And we'll see if we can get more answers for you. I'll end on this slide. I threw a lot of information really quick at you all, but if you've got curiosity, killing the cat there and want to read more up on it, we did a 5-part market intel series on sustainability markets, pretty much everything that I talked about in this presentation, and put it on paper for you to have as a primer for your research before you start investigating partners to work with. And so feel free to check that out on our market intel webpage and get other economic analysis from our econ team here at American Farm Bureau. So thank you again for having me, and I will stick around for Q&A later.
All right, thank you very much, Shelby. Appreciate it. Nathan, we'll go right to you.
Thanks, Jordan, and thanks everybody for having me. So my goal and my kind of task here today is to follow up Shelby, who gave us a really good kind of broad overview of what's going on in these markets, and kind of drill down a little bit and think a little about what farmers are actually doing in terms of participation. So really, the main thing that I want to show you here is we at the Center for Commercial Agriculture, which is a center in the Department of Agricultural Economics at Purdue, conduct and curate the Ag Economy Barometer, which you may have seen. The barometer tracks producer sentiment and kind of what's going on in the ag economy. The kind of externality or the benefit that we get from that is that we're talking to producers every month about various topics. And so Jim Minert, who's the director of the Center for Commercial Ag, was kind enough to let me throw some questions on the end of the barometer that related to carbon markets, right? So we were able to talk to producers about what they were doing. Were they aware of these markets? Had they sat down and talked to anybody, and had they participated? And so what I'm showing you is the results from those surveys. So we asked producers, basically the barometer every month is talking to 400 producers. It's nationally representative. It's stratified by various crop types and livestock types of agriculture. And so we asked February, March, and April of 2021, the same questions, and kind of aggregated those together to give us an idea of what producers were doing in this space. And so as you can see, of the 1,201 producers that we talked to, 465, or about 39%, said that they were aware of opportunities to store carbon. So I'll echo Shelby's point, right? When we talk about ecosystem markets, it's much broader than carbon. Carbon is what I'm focusing on here. That's the elephant in the room. That's what gets all the press. And so that's what we kind of focus our questions on. But again, it is broader than that. So here we're asking about, opportunities to store carbon on their farms. About 39% said they were aware of these opportunities. We followed that up if they were aware and asked, okay, well, have you actually sat down and talked to one of the companies that Shelby kind of went through and gave us a kind of lay of the land of what some of these companies look like? So you can see 85% of the producers we talked to, which is about 7% of the full sample, said they had actually sat down, talked to somebody, looked at a contract, asked some questions. If they had actually sat down and talked, we then followed up and said, okay, well, did you sign the contract? And only 16 of the 1,201 total responses said they had actually signed a contract to store carbon on their farm. So that's 1%. So about 1% of the producers in our surveys had actually done this, right? So that gives you a little bit of an idea. We hear a lot in the media about carbon markets. And again, there's a lot of benefits that can come from this. So when you think about, what is my neighbor actually doing? Chances are they haven't signed a contract to participate in these markets. It's just not something that we've seen a lot of uptake on from a producer perspective at this point. So the other thing we did is we didn't do this the first month. We kind of adapted as we went along. So the second and third months that we asked these questions, so there's fewer responses in here, but we asked those who had actually sat down and talked to somebody, what was it that was preventing you from participating, right? Why did you choose not to participate? And so you can see we kind of gave some potential answers that we expected to be things that people were hesitant about. But then we also had some other categories in here. And what you can see is very clearly at the top, most people were concerned about the payment level that was being offered. And so Shelby talked a little bit about prices and how that's determined. I'm going to talk some more about that here in a second, but that was by and far the most important things to producers as far as why they weren't participating was price level. Some other things that were kind of in there, legal liability. So we'll talk about that some more. If you're not going to comply with the contract, what's going to happen? There were a number of people that kind of went to this other category, and we had an open-ended response there. I didn't summarize those for this presentation, but I can tell you from looking through those, they all deal with the financial aspect, right? Cost versus benefits, or some aspect of price, right? Which again is already at the top of the list there in terms of the payment level. There was some general skepticism, right? I don't really understand what's going on here. Previous use of eligible practices. So Shelby has already defined for us kind of the additionality concept here. And so that did prevent some people from participating in these markets. And then finally, we asked about this idea of whether or not they could stack different programs, right? So can I sign up for a carbon market if I'm already receiving a QIP or CSP or something of that nature, given that some programs do allow that sort of stacking, some programs strictly prohibit it. It just depends, but nobody in our sample really identified that as being a problem as to why they hadn't participated. So if we drill down a little bit on those kind of potential barriers to participation, and we kind of flesh them out a little bit. Again, going back to the survey responses, the price level offered was by far the kind of biggest issue that we saw. And so as an economist, right, I can tell you price is going to be determined by both supply and demand. And again, Shelby has already alluded to this, and so I won't belabor the point, but really what we see is that supply is definitely lagging demand in these markets, right? I just told you only 1% of producers in our survey had actually signed a contract. So people who are willing to supply soil carbon offsets in these markets is relatively small. Demand is obviously much more developed in the sense of, every company in the country is lining up to make these carbon neutrality pledges. As Shelby alluded to, these are voluntary pledges, right? We have no sort of cap and trade or any sort of tax on carbon. So these are all voluntary commitments. So how much of that demand is actually going to follow through is to be determined. But nonetheless, they're at least saying that there's a demand for these sorts of offsets. And the thing is that the price and the demand here are really going to vary depending on the quality of the offsets. And again, this is something that Shelby has kind of alluded to in the idea of the additionality piece, the permanence, right? These offsets have to have certain qualities in order for the demand to be there, in order for a company to be willing to purchase these offsets and say, okay, I'm Walmart, I'm going to purchase these soil carbon offsets to offset my carbon emissions. And in order for me to be willing to pay a certain price for those, I need to know that they're new, and I need to know that they're going to, that carbon is going to stay in the soil, right? It's not going to be re-released. And so one of the things we asked on our survey was kind of this price level question, right? So we obviously saw that price was a big impediment for people in terms of participation. And so the pie chart here on the right-hand side shows at least what the respondents in our survey said that they were getting offered. These weren't signed contracts. These are what they were being offered. We asked that in dollars per acre. Again, some programs pay per practice per acre, some programs pay per metric ton. We asked them per acre terms just to make it easy. And you can see, right, 84% of people were less than $20 an acre is the offer that they saw. So that, somewhere below that, 10 to 20 or less than $10 an acre is kind of the most popular. There were some people that reported offers higher than that. I know I've talked to some producers. There are some programs that have these kind of sign-on bonuses where you can get prices that are quite a bit higher than maybe what the average is. But that's not, I don't think that's the norm. And so again, kind of deviating from what we asked on the survey in this dollar per acre term and going back to what kind of current price levels are, if you just click around and look at some of the different programs, $10 to $20 per metric ton, so not per acre, per metric ton, is really kind of the range that you would expect to see. That's pretty normal. Again, some are higher, some are lower, but that's the middle ground there. So then to convert that to dollars per acre, you really got to think about, okay, well, how much carbon am I actually going to sequester in the soil? And again, that is a big it depends question. I've used a half metric ton per acre as a baseline. That depends on the practices. It depends on where you are. That number changes, but that makes the math easy, if nothing else. So if you could store a metric ton of carbon per acre on your farm, you convert that $10 to $20 per metric ton to dollars per acre. That gives you $5 to $10 per acre is kind of the payment level that we're looking at for most farms. And again, that is somewhat consistent with what I'm showing you here on the pie chart, as far as where most people said that the offers they were seeing were falling. To put some perspective to that number, so we had some colleagues here at Purdue that did a survey several years ago now. So this was really, before this really big wave of carbon markets and these sorts of things. They did this hypothetical survey it dealt with storing carbon in the soil. And basically the survey asked Indiana producers, how much would we have to pay you to move from conventional tillage to a no-till system, right? So that's what they're asking the producers. And when they collected those survey responses, basically what they found was that on average, again, it depended on the producer, but on average, you'd have to pay producers $40 an acre to get them to switch from conventional till to no-till. So again, that was their kind of willingness to accept. That's what they needed to make that switch worth it to them on average. But I'm telling you, these carbon markets are really right now in the $5 to $10 per acre payment level. And so you see there's a pretty big gap there as far as getting that carbon price up to where we're going to see more widespread adoption. The other thing that I'll throw out there, and again, I think Shelby alluded to this. Okay, $5 to $10 per acre is what we're seeing to participate in these markets. We're in an economy where $1,000 gross revenue for a farmer right now is not uncommon. $5 to $10 an acre just doesn't get people very excited, right? And that's just the truth. And so if we really want to get farmers' attention, I don't think current carbon price levels are going to get the job done to get people to participate. The other thing here, so we've talked about the additionality piece being, we need to pull in new acres. The other thing is the carbon that's stored in the soil needs to be there permanently, right? So the problem with storing carbon in the soil is that that's not a permanent process, right? It's reversible. So if we adopt a practice and then go back to a previous practice, we re-release that carbon. So an example is if you sign a contract to go no-till, and then you need to do some tillage for a legitimate reason, right? You got some field ruts, some weeds, whatever the situation is. If you go into that, you're in, breach of the contract. And so the question is, well, how's the company, the carbon market, going to deal with that? And it depends, right? It depends on who you ask. Generally, what I hear from the companies is, okay, well, we're not gonna make you pay back the payments that you've received. We're gonna pause the payments until you can resequester the carbon that you released by doing that tillage or whatever, and then we'll resume payments later. And in theory, right, that's great and sounds like it's beneficial to the farmer, but the reality is the farmer really don't want to continue those practices in the absence of payment. And if they don't, right, there's going to be a legal liability, just be honest, right? And so they're going to probably have to buy those credits back at the market price. And again, that could be higher or lower than what they had received. Shelby also alluded to the length of contracts. This again gets at this idea of permanence, needing to know that the carbon is going to be there for the long haul. The contracts that I've seen, 1 to 20 years is kind of the range of the programs here in the United States, at least the popular ones. And it really just depends on what you're looking at. That's relatively short term when you think about carbon sequestration. So as a kind of comparison, Australia has a program called the Emissions Reductions Fund. It's not just agriculture, it's their kind of overall climate program for the nation. And agriculture is a part of that. So I think agriculture represents like 10% of those contracts or something. So agriculture does participate and they're subject to the same kind of regulations. they mandate a 100-year contract, and Shelby mentioned that, right? They want to know that the carbon that's stored is going to be there permanently. Now, that's a huge commitment for a producer. They did come back on this Australia program and reduce that to where there could be these 25-year contracts. So, a little closer to line with what we're seeing here in the United States. But those contracts were very clearly trading at a reduced price, right? So again, we go back to this issue of the price and the demand is going to be determined by the quality of the offset. And so we have producers that are not willing to get involved in these long-term contracts, and there's probably a good reason why they may be hesitant to do that. We're going to have an issue with getting the demand up and therefore getting the price up. The other kind of piece, again, goes back to additionality. Do I qualify? And again, Shelby already addressed this, so I won't belabor, but typically if you've been implementing these practices for the last 30 years, you don't qualify to participate. And that can be really frustrating for people. But frankly, the way the markets are designed is they're not there to pay people to store carbon that they would have stored anyway, right? Walmart doesn't want to pay you to do something you are already doing so they can offset their carbon footprint. They want to bring in new producers that are going to store new carbon, because that is what makes sense for them when they're going to purchase these credits, is doing something that wasn't already going to happen. Shelby mentioned that there are some look back periods, it just depends on the program, and you got to kind of get grandfathered in on those, but that's not the norm. The norm is you're going to have to implement new practices. So I think I'm about out of time, so I won't go through each of these. Again, we can leave these maybe for the Q&A session, but some other questions that I hear frequently and I think are important ones for farmers to kind of ask and get better information on as it relates to their participation. Who's going to pay for verification? Shelby mentioned that. Can I get paid for carbon that I store on leased acres? That's another interesting one that has its own set of dynamics. The answer is yes, but it's not necessarily straightforward how that's going to happen. And then what is government's role, right? So Shelby mentioned the Growing Climate Solutions Act. Clearly, government is going to be involved here. The question is to what extent, what level of oversight are they going to provide? In my opinion, as the government gets involved, there are going to be winners and losers depending on how and when they get involved. We just don't know who that's going to be because we don't know exactly how that's going to play out. So with that, I'll turn it over to Jordan. I'll just point you, if you have questions, feel free to email me. We also have some resources related to kind of carbon markets on the Purdue Center for Commercial page.
All right, perfect. Appreciate that very much. All right, Lucas, you're on board next.
I appreciate that. Thanks for everyone having me on today. So my name is Lucas Fricke, like you said, farmer from Butler County, Nebraska. And we actually sold carbon credits through the TrueTerra offering to Microsoft here last year. The reason that we were able to do it kind of comes back to a bigger issue that we've done on our farm, and that comes to the whole sustainability overview for our farm. And so about 4 years ago, we got on a platform called TrueTerra, which is offered by Land O'Lakes, and it really kind of helps bring in all the data points that are on our farm. I know both Shelby and Nathan talked a lot about data collection and how important it is. That's going to be definitely true. So if you're on a precision ag platform like Data Silo with Winfield United, Granular, Climate, so on and so forth, that's really going to make a lot of the lift to participate inside of carbon markets fairly easily. I know Shelby kind of talked about you opening up your books. I never really had to deal with any kind of financial situation where they're looking at any prices I was getting or anything along those lines. It was clearly practice data. And because we participated within inside of the sustainability platform called TrueTerra, we got offered to be involved with True Carbon, which again was taking the credits and looking back at the last 5 years of practices that we had implemented on our fields, and then going forward and selling the carbon that we had sequestered from the environment and put into the soil. So extra CO2 that came out of the environment and stayed within inside the soil structure. And so we were able to do this through the implementation of strip tilling was our change in practice. Now, the biggest thing that I want a lot of farmers to think about is we didn't change to strip tilling because of the carbon market. We changed to strip tilling because there's a return on investment, and better sustainable practices got us a return on investment. So this carbon, the ability to participate in the carbon market was gravy on top of what we were already doing and seeing the bushels per acre increase. And so I think that's a really big key aspect to, especially a person in agriculture that's farming all day long. Like, you got to make sure that this makes money at the end of the day for you. And you got to do what's best for the environment so you can still be keeping able to growing those crops in those kind of situations. So my experience with the carbon market, super easy because I had all my data in one aspect. There was an Excel sheet that I had to fill out, kind of overviewing my practices. Then from there, I submitted that. That was probably about 8 months ago. And then early of the year, they came out and pulled soil samples from that as well, ran some carbon modeling, and then a payment is submitted after that. So for my aspect, it was pretty painless to participate in it. Very easy process. People were super nice. One of the biggest things when evaluating the carbon markets, our data is worth something. All the farmers listening today, your data is worth a lot. And especially large companies are really looking to help reaffirm their commitments or look at being able to decipher that into different situations. So definitely be worried about who you're getting involved with and what requirements are around your farming practice data. So again, Truterra was one situation that I really enjoyed because I didn't have to buy any extra products to participate in it. And when it came to the verification steps and the quantification steps of how much soil carbon I had, that was paid for by Truterra, and that offering was not paid by me. So I was offered one flat rate. And any other fees and situations were taken out of on their end of it. So it's pretty straightforward process about all of that. I can't say anything bad about it thus far. My agreement is within the next 20 years, but I do have the ability in case a disaster happens in our field. Let's say, I have to mud out stuff and I have to do some deep tillage to get some ruts figured out. I have to be in contact with them and let them know that practice change in there. And we work with them on that aspect of it. So potentially it could fall out of the compliance for that situation or it cannot. It's kind of up to their discretion, and especially what kind of tillage practices are taking place going forward. So I know especially what we were concerned about being involved was, is this just like seed money? Is someone doing this as a pilot project? Is it actually going to something that actually is making a difference? And so that's where our offering that we're involved with through Truterra was completely different, because it went directly to the Microsoft Corporation to offset their amount and help them reach their climate goals. So again, this is a repeatable thing on that end. So definitely I don't want it to be a one-off or from a company that just started up either, because we talked a lot about longevity today. This is a long-term contract. Who is this getting sold over to if they go out of business? So that was another situation that I wanted to pick someone that I trusted and that I work with consistently over the long term. So that's why we worked with Truterra, which is a part of Land O'Lakes Corporation. So yeah, excited to answer any questions. Again, we went from a cost aspect first off to say, okay, how are we going to raise better corn? Let's try strip tilling. And then because we did strip tilling, we're able to participate in that marketplace.
Perfect. Thank you so much, Lucas. Really appreciate that. Jay Ferris, are you there? I think we had a fantastic conversation here. Lots of questions, hopefully that folks have, and we can get to the Q&A part.
So yeah, Jordan, any questions you have, please put those in the chat box or in the Q&A function. If you're watching on Facebook, you can post those in the comments. I'm monitoring all that. You can also raise your hand and we will identify you, and then we'll allow you to unmute and ask your question that way. If you're joining us by phone, so a lot of directions here, sorry about that. But if you're joining us by phone and not on the computer, press *9 and we'll see that you have a question. And then when we recognize you, press *6 to unmute yourself. But we do have one question that has come in, and it is, how do you think perennial rotation crops like alfalfa will work for carbon credits?
I actually get that question a lot, so I can lead with it, and then if others want to add. So alfalfa in particular and perennial crops, they're still trying to figure out how that can fit into everything because, again, in order to make, we shouldn't say make the markets work, in order to fulfill the demand that's being asked from the buyer side, you have to have a change in practice. So if you're growing alfalfa on a perennial basis, you'll have to have a change in current production practices that would increase the amount of carbon sequestered compared to what's currently being involved. So whether that's adding another cover with the alfalfa or introducing some sort of grazing, maybe rotate alfalfa off in there's a number of different ways that it could play out. They just have to develop the protocol in order to work with producers that would work for your field in order to make it work. So to be determined.
Okay. Any other comments on that? Kind of going into that additionality comment, I know one of the concerns that's out there is that there might be producers that have been adopting some of these practices that will go back and till everything up just so they can qualify. Is that a concern?
So I have had that question multiple times. It's clear that we've created an incentive for that. However, the markets have also been prepared for that and have said they will check via satellite imagery back, to certify your practices. So I highly don't recommend that someone runs a cultivator through the field just to qualify. But there's certainly that incentive that's been established that it has to be acknowledged, and why it's so important that early adopters are part of this conversation and somehow compensated for this.
Just saw Lisa's question too there, Jay.
Yeah, go ahead.
I was going to say to Lisa, you're talking about if farmers have been no-tilling for 25 plus years and been sequestering carbon, why are they not compensated? Because the change in practice today has immediate change, but what changes long-term? So from my farmer perspective and how this has been explained to me too, we have our set limit and we want to go above and beyond that, what is already being done, because we want that to lead to positive change within the climate. So that's where the issue of additionality comes into. And so I know Shelby and Nathan keep talking change in practice. That's really what it comes up to. We want to go above and beyond and take in more CO2 out of the atmosphere and sequestering that into the soil.
Yeah, the definition of additionality is beyond what's currently being done. And so, and it really comes down to, I like that you put above and beyond, because it sounds so much better, because unfortunately what it comes down to is that we can quantify more with the change in practice than what's currently being done. So that's how credits are being generated, I guess technically turning it into the actual product that's being sold and exchanged.
And so this question here kind of is in addition to this additionality, but it's, existing programs such as buffer strips, wildlife habitat, rangeland, all kind of gets into that. But I would assume that there's probably some areas we've looked at for if you add buffer strips or put some wildlife habitat in, that there would be something that will qualify there.
I don't want to monopolize the conversation, but there are markets that are developing to try to compensate biodiversity credits, and especially from pesticide companies who are looking for offset credits for pollinator habitats or whatnot. If you can get paid for creating a pollinator habitat or a wildlife habitat like that and generate biodiversity credits that would then be purchased by a company like a crop protection company, that's certainly being talked about and expanded and could be an option for folks. I know buffer strips are also available as part of a conservation choice in a lot of the markets. So there's always possibilities. It's just a matter of shopping around and picking a company that offers what you needed to offer for your farm.
Okay. Another question that has come in, are companies, such as Microsoft or any of the other companies, are they making core sustainable changes, or are they just simply using the farmers' carbon credits for their stockholder demands?
I can answer that question because I've been involved with discussions with them. Yes, so that was a part of their greater climate goals and their climate commitment by 2030. And again, I'm talking about Microsoft because, not that I support them or whatever, I just know from the True Terra offering, because they put out a process and looked for technologies that they can either be harvesting CO2 out of the atmosphere and then physically storing that in the ground through some new technology that way, planting trees, those kind of situations. This is just one of the aspects to the entire offering of them changing their climate impact and going above and beyond. So they're not, it's not a, what do you want to say, a license to pollute more, or however you want to look at that, or produce more CO2. It's to help offset what they're already doing, or the offsets the carbon production that there's no technology to create differently. And like their server farms, that's probably one of the examples that they're going to be trying to use these carbon credits for, to make themselves carbon neutral in the end. So hopefully that kind of helps explain a little bit. Yeah, it's a core goal to change.
Okay.
Yeah, companies are certainly streamlining their supply chains to try to find as many reductions as they can. And then this is the we've done all we possibly could, but now we're a little bit over and we need to be net zero. And folks are losing their board seats for not committing to sustainability. And this is very much a scenario where you can follow the money and understand where a lot of the directives are coming from.
Okay. So the next question we have here is, how many years? So I understand the additional part. How many years is one producer adding with just one production change?
It's part of why the contracts are long-term contracts, because again, we're establishing a baseline in year 0, and then they're going to come back in years 1, 3, 7, 10, and measure the change that has occurred, and then get paid on the delta that has happened from year 0 to year 10. And so not to get super economic-y, but it's kind of like, it's calculus. We're estimating the amount underneath the curve essentially, and quantifying that amount and turning it into credits. And so it'll depend on each farm, and it'll vary by farms. And then when you receive a contract and you've made those changes, keep in mind too that they have a vesting schedule, as far as, so you've generated the credits, but then fees and whatnot associated with that, and the marketing pieces are also dictated in the contract.
Okay, we have Garrett with his hand raised. So Garrett, you can unmute your microphone.
Yeah, can you hear me?
Yep, we can hear you.
I guess the one question I had was, I had heard that possibly, nitrogen management could be possibly related to something like this also. For us, we utilize no-till and cover crops already for like the past 5 years. So potentially, reducing your nitrogen or nitrogen practices could qualify for something like this.
Absolutely. Yeah. So carbon's just kind of what we talked about. Carbon's the higher demand product by other economic sectors, but there is, I guess, an awareness from a lot of these companies that agriculture has other greenhouse gas emissions to work on and mitigate and could generate credits for. And so working on protocols that can address that, and then streamlining the data burden so that you could participate, and then potentially have the ability to stack credits so you could get paid for your nutrient management and your carbon sequestration in certain markets.
Okay, another question I have is, are there steps that producers should be taking if they're thinking about this to prepare prepare their participation in the credit markets, such as identifying their current practices, what records they're currently keeping, etc.
Yeah, the thing that I would say, because I've done it, I would get on some type of technology platform to help organize that, or get a sheet that you are coming down to how much fertilizer I applied, what kind of fertilizer I was applying, what tillage practice, how many inches of water if you're irrigating, what are you using to pump that water. I mean, it's a pretty big sheet. I know. I'm not trying to sell Truterra to people. There's plenty of other great ones out there. But I know, like ours, it ends up creating 1 trillion some data points for that farm is their big calling card. So there's a lot of pieces of information that flow into it. So if you're on a farm record management system, definitely get on something electronic, because that really helps organize it and ask the questions easily for entering in all that data.
Yeah, I'll follow up on that. I mean, it sounds like Lucas had a really great experience, and I'm glad for that. But I have talked to producers that was not their experience. It was weeks or months long process of aggregating and curating the data that was necessary to get into the program. And so there clearly is some advantage to being involved in something that you already have kind of built that upfront cost, sunk cost. If not, just frankly, my understanding, I haven't done it, right? So I can't speak to it, but what I've heard is that it can be quite costly in terms of time getting all that put together.
Yep, you are exactly correct. If you don't have everything organized in one spot, it is a process. Just being completely honest with you. So I would definitely say if you are wanting to participate in these, ESMC has an online platform that they're going to be releasing as well, that people can start participating and entering their data. So just definitely be mindful. It is going to take some time if you are starting cold turkey square one. So yeah, Nathan, I will say I'm lucky because we started a couple of years ago, and we're on climate and we're on a digital platforms for that aspect. But one thing that I would also say, if you are going to choose one of these companies, look for the ag data certified companies. Those are super important because that means that they're not selling your data to other people, or they're doing something that they shouldn't be. And I know Farm Bureau supports that, as well as a lot of the other people on top of that.
Yeah, I would say to have your legal affairs in order too. If you're a tenant, this is going to be a tough conversation to have with your landlord. And so be prepared for some negotiating and some conversations about longer term leases and what that looks like. If you're part of an LLC or a trust, gathering all the folks together and having that conversation about making some significant long-term changes to the farm that would impact for conservation, because it's one more hard conversation to have among the legalese and the partners of the farm.
I have one final question here. Any sense of where these markets might be in 2 to 3 years, or I'll even say 5 to 10 years from now?
I'll take a shot. I mean, nobody knows, right? I think Shelby really did a good job of alluding to this, that it changes very, very quickly, and it's changing very, very quickly. So I don't know. I'll be the dismal economist. I mean, carbon specifically has a lot of issues with the biological processes of how carbon gets stored in soil. I think there's a lot of potential advantages to viewing production agriculture as a potential solution to the problem, right? That's a great seat to have at the table. But some of the specific aspects of carbon markets specifically don't bode well to me for long-term success. Like I mentioned, you've got to have certain aspects of these credits in order for them to be quality credits that there is demand for. Got to have demand, got to have supply to get a price. And those things, those are big hurdles that are going to have to be overcome.
Yeah, and right now companies are competing daily for their portion of supply. That's why I think this is such a hot, that's why everybody wants to talk about this, because they're getting calls and companies are trying to lock in acres. We have a finite supply of land that can be enrolled in these markets. And so you will quickly see companies that maybe didn't successfully get enough land to make their business models work and fall out to the wayside, or you'll see companies that partner up because the one company in particular has most of the land involved. And so you'll see a lot of market shift. And like I said, we're in that growth curve, and we'll see who makes it on the up and up.
Okay, well, first of all, I want to thank everybody for being on today. Is there any final comments that any of you as the panelists have that would like to share with the group before we let everybody go?
Good luck.
Yeah.
Yeah, I want to echo Shelby's comment that she made earlier, and that is conservation more broadly is very valuable, and don't miss the forest for the tree that is carbon markets, right? I think that there's a lot of value in conservation more broadly. There are other programs where farmers can get resources to help move them along the conservation kind of path. It doesn't have to be just carbon markets that make or break that decision. And so, you know, we're spending a lot of time on that because that's kind of the hot topic. But don't let that be kind of the one stop that you make on the path to potentially implementing some conservation practices that could benefit the farm, right? They're proven benefits to a lot of those practices. It's just kind of how we incentivize and how we reward farmers for using them. There's a lot of different ways that we can do that.
The last thing that I would like to add, just being a farmer, is your ground best, your animals best of all this. So do what's right and what's been working for generations. I mean, this is a new shiny object. There's going to be first time adopters, kind of like me. I like to live on the outside and on the edge, but don't take my words, for an aspect of, hey, I need to do this right away and then go and change the farm. Do something that's going to work for you. And I think that's normally the case with most farmers, but I wouldn't get too overwhelmed. Do what's right for your farm, and kind of echoing what Nathan and Shelby have been saying about this conservation. It's nothing much bigger than that. It's just a little bit of extra gravy on top by doing those new practices.
Okay, well, once again, I do want to thank everyone for participating today, those online, and a special thank you to Shelby and Nathan and Lucas for being our panelists today. Thought it was very informative. I learned an awful lot, so hopefully everyone else did too. For those that are participating today, tomorrow you will be receiving an email that will have copies of the presentations you saw. Also a recording. We did record this webinar, so it is available. It'll be available on Facebook, but it'll also be links available in the email that will be sent out. We're also going to include a short survey, and we encourage you to please take the time to fill out that survey, suggest topics for our future events. This is something that here at Nebraska Farm Bureau, we will be offering, and our next scheduled webinar is going to be on November 2nd, and it will focus on Nebraska's beginning farmer and rancher program. So please stay tuned for that for additional information. And once again, I want to thank everybody for their time, and go out and enjoy the rest of your day.